This is our Forex blog for January 31st, 2013, and this is our basically new currency meter that also now shows each currency as if it was a chart. This is the dollar compared to all the pairs, all the dollar pairs together as a chart. If you hit the plus and minus key, it automatically zooms in and can allow you to see exactly the range you want. This works on weekly charts, daily charts, in any intraday time frame from 1 to pretty much whatever. If you click on the load button of our software and go to chart examples, it's underneath Forex currency indexes, and you can add this to your existing workspace by unchecking clear current workspace and clicking open. You can also put it on any layer you want. So now that you've seen it, let me actually hide this layer and show you how to set it up with different time frames. Start by just adding a euro-dollar chart. Oops, I put it on the wrong layer. Put this on layer 2. Hide layer 1. And then you simply right-click on the chart, go to Add Script, and go down to FX Currency Indexes. And any time frame underneath hourly will show the hourly moving average, 15-minute, and at this point you got to put in star, let's say USD for dollar, star EUR for euro dollar, and so forth. Now you can, like I said, see this on longer time frame charts too. Here's a 240-minute trend. And if you want to get rid of or change the grid so it's less visible, you can just make it darker, which I like to do personally. Then you don't notice it as much. And once you've created one, you right click on it and duplicate it. And this lets you see the trend over a different time frame. Let's look at the dollar and the yen, which are the two main pairs that people trade, or two currencies that people trade the rest against. And then we'll put star EUR. This is looking at the euro dollar. We'll put the pound up. And this is how you can do multi-time frame analysis using our new indexes. If the longer time frame trend is up and you see good patterns on the intraday chart, it adds to your probability. Conversely, if you see a currency that's been down 3, 4, 5 days in a row and it's hit the next fib level, then it's likely to possibly reverse. You can see the euro trended up, had a nice pullback. This was a phenomenal place to be buying that pullback 2 days ago, and it rallied up, and it's up a lot. It went up, up, up. It's kind of level on off here. If you saw any signs of weakness today, you can certainly look to sell the euro. The dollar has been trending down, and so is the yen. The yen obviously is much weaker than the dollar. You can clearly see that. If you hit the minus key, you can zoom out. And this was right near the lows, and it broke all-time, multi-month lows today. So, when you see that on longer time frame charts, obviously that's a great currency to be selling against one that's stronger. And let me change this to another currency. Let's say the Australian. We'll see if we can find another longer-term pattern. Okay, so here's the Australian, and you can use our fib tool, Control F. You can't just draw your fibs on the chart because we have this set to auto scale, and since this is a synthetic symbol I've created, it doesn't work. You'll see it disappears because it's trying to scale to the to another chart that's underneath it. But you can use Control F, hold the Shift key down, and then draw your fibs right on the chart. And you can see the Australian, clear downtrend, pulled back up to the 38% retracement. This was a phenomenal sell yesterday, and somewhere between the first and second fib target is where this one's very likely to reverse. So it makes sense that today the Australian is a decent one to be reversing to the upside, and the euro is pretty, topped out. It's likely to come down. Clearly, the dollar's in a downtrend, and the yen is the best one. So the Australian yen made sense to be buying it, and this is how you can use our tools to really increase your odds. So let's show the yen here. This one's a weak one. And then the Australian, which is if you see signs of strength in it, like a double bottom, or going from underneath to above the 15-minute moving average, and especially the hourly right here at 4 o'clock. This is a phenomenal Australian buy because the longer term chart showed that it was near the fib target and very likely to reverse. You know, you can also use our lower containment bands last night to pretty much time that perfectly, almost to within a pip. And you could have bought most of the Australian pairs. But let's take a look at this. At 4 o'clock, it's very likely to continue up because when they break from underneath to above the hourly, you get big moves, just like last night. Huge move down right here, decent sized move up. At 4 o'clock, you can see the exact opposite happen in the yen. It was already weak on the longer term chart. It was above its hourly moving average and pretty much broke down right around there. So pretty much a no-brainer, 4 a.m. Australian yen buy. Here's 4 a.m. and you can see slightly higher lows, which is a big sign of a reversal. And also, by the way, take a look at this last night, a little bit before midnight, 11 o'clock. This was showing a likely reversal of Australian pairs, and within basically 5 to 20 minutes, you got a reversal last night too. But look at this trade right here. It went from 70 up to 90. It's a 20 pip move, and because the Australian on the longer term chart was likely to reverse and the yen is super weak, basically you had this other trade right here when it broke out, and honestly I would have probably, let's put this right on the top here. Yeah, so we would have been in this trade at 94.80, and you can see you can also draw your fibs on this chart. Remember, hold down the shift key. Oops. And the fib targets are great places to get out of the trade. Actually, you don't have to hold down the shift key with this because this is the actual chart and automatically locks to the highest high, lowest low. That's why I put this tool in here. You see this bar right here, if I let go of it, it snaps to the high, and it gives you perfect Fibonacci placement levels automatically. So that's how you can use this. Now again, the yen breaks down, finds support at the point of control, rallies back up to the hourly. This support area has now become resistance, and so around 7 o'clock, great place to sell the yen, and this isn't in an ideal place to buy the Australian, but 7 o'clock is a great place to sell the yen. Let's find one that's in a great opportunity for buys at that time, 7 a.m. The euro's underneath its hourly. The pound is as well. The Swiss is. The CAD at 7 is pretty much above its hourly and kind of going sideways. It's below its point of control, unfortunately. But more than likely, the CAD yen would be a decent one to trade. Only one of them really has to be super strong or super weak to give you 10 to 30 pip moves. If one's super strong, the other one's super weak, you're going to get 30 to 50 pip moves, I found. So let's bring up the CAD yen right around 7. Very likely to be going up. And here's the 7 o'clock. It actually took it a little bit of time to break out over the highs. And you can see you might have had a little tiny loss there. Then it broke out a little bit later and went from 90 up to almost 50. It's a 60 pip move. And the thing I like about these indexes is it frequently gives you early indications of future price action of the underlying currency pairs. In this case, you had about an hour and a half before the real move happened, and then ultimately half an hour after that, it went up 60 pips. I like knowing the majority of the time what a currency is going to do in the future. Let's take a look at the New Zealand. This one looked pretty strong today. Notice it's above the hourly moving average. Also notice this at 4 o'clock. Broke from below to above the point of control. This is the price that most traders had positions the previous day. Major area of resistance when coming up to it underneath, and support coming down to it from below. Notice how the pound here acted as resistance. You're going to find that to be the case. And so when this broke above here, remember the yen was weak. The New Zealand yen 4 a.m. was an amazing trade. I don't even have to look at the actual underlying chart to know that. Here's 4 o'clock, and notice the breakout didn't occur until 15 minutes later. You had a 15-minute head start to be aware of this pair, and went from 04 up to 36. That's a 32 pip move. So like I said before, when one currency is strong and the other one's weak, you frequently will get 20 to 50 pip moves. If one currency's super strong or super weak, and the other one is just kind of going sideways, but is not, if one's weak and the other one is above its hourly, above its point of control, but not necessarily going up, you'll still get a 10 to 15 pip move out of that currency that's going sideways versus the pair that's super weak. But in this case, this one was strong, the yen was weak, you got a 30+ pip move. Notice how the 15-minute and hourly moving average also act as support. This one had been trending up, finding a little bit of resistance up at the previous day's high, pulls back and finds support. Notice at 10 o'clock right here, pretty high probability to continue up when it breaks the bar's high. 10 o'clock right here, let's find a currency that's weak at 10 o'clock. Well, at 10 o'clock here, it's obviously the yen, because you can see not only is it underneath its hourly, it broke down a little bit before that, the point of control. Notice how it acted as support. This is where most traders in all the yen pairs have the majority of their positions for the previous day. Amazing level of support resistance based on trading activity. It's not like the pivots or other support resistance areas. This is real because this is where most traders have positions in all the yen pairs for the previous day. If it breaks that area, everybody who's long for the previous day is losing money on average. So you're going to get a lot of covering of losing positions, which causes it to continue down. Here's the previous day's low. When it breaks that, you can see it just broke from underneath yesterday's low. And so the New Zealand was strong, the yen was weak, pretty much a no-brainer at 10 o'clock as well. Here's 10 o'clock. This one's already above the high for the day, breaks out and goes from 40 all the way up to 70 in about an hour and 10 minutes max. Actually an hour. 30 pip move. Again, doesn't get much easier than this. I think I've now found a tool that anybody can use to trade Forex and focus on being in the best pairs and also knowing when to buy, when to sell. And that's basically all you need. All you have to do in addition to that is use proper money management, not risk your entire account on one trade. You know, risk 1 to 2%, maybe 3% if you have a really high probability trade on any given trade, and use this to get in and out. If the currency, one index is going down, the other one's going up, you hang on to your trade. If one of them kind of runs into major support resistance, and so as does the other one, you might want to exit half your trade and see if the price is able to break through it. If it does, hang on. You're going to have a big continuation on the trade. If not, you have a small 5 to 15